Hey everybody, what's happening? One of the most followed solar stocks in America right now is First Solar. On April 27th, First Solar released their earnings for the first quarter of 2023, and it was a big miss. The stock dropped from its recent highs of $220 down to $182.5. Now, First Solar is one of the solar companies that I have covered again and again, and there's a good reason for it. It's a great solar company and a great solar stock. Has the recent earnings release changed that? Let's take a look and find out. So, what were the actual results? First Solar reported a revenue of $548 million, which missed expectations by $168 million. First Solar's earnings also came at $0.40 per share, which missed by $0.62. Despite this, First Solar reaffirmed its earnings outlook for the 2023 financial year. The expected EPS is $7 to $8, which is in line with the analyst consensus of $7.2. First Solar also reaffirmed its revenue outlook of $3.4 to $3.6 billion for 2023. This outlook is also in line with the analyst consensus of $3.5 billion. Overall, First Solar missed estimates for the first quarter by a very wide margin. However, the management sees no change whatsoever in financial expectations for 2023. This is why the stock price drop was so little. If they had reduced expectations at all, we would have seen another 10% drop in price minimum. The thing about the solar business is that it is very seasonal. We should be aware of these fluctuations, although we should also be skeptical. We need to track results like these because they can turn out to be massive red flags. Apart from revenue and earnings, First Solar also reported a small decrease in cash and marketable securities. These went down from $2.6 to $2.3 billion. That's not a big change at all. The decrease was due to the ongoing expansion in Alabama and Ohio in the US and Chennai in India. The factory at Chennai is almost complete and should start production in the second half of 2023. First Solar expects to complete the Alabama factory by the end of 2024, with operations ramping up throughout 2025. The Ohio factory expansion should come online in 2024 as well. Once fully operational, the Chennai factory should add about 3.5 gigawatts to First Solar's annual production. The expansions in Alabama and Ohio should increase US production capacity to above 10 gigawatts by 2025. It is good to see that First Solar are working on improving production capacity. The solar company is seeing a lot more orders coming in. As of April 27th, First Solar had a massive 71.6 gigawatts in bookings. 4 months ago, they only had 61.4 gigawatts. Seeing such a big increase in bookings is great. The only problem is that First Solar does not seem to have enough capacity to service these. I have the feeling clients may start looking somewhere else if they see a massive wait time. First Solar expect to sell 11.8 to 12.3 gigawatts in 2023. That means that to fully service their current backlog, it would take them almost 6 years. First Solar need to double down on increasing their capacity as soon as possible. Any slowdowns in the Alabama, Ohio, and Chennai projects can result in big losses for the solar company and missing out on future bookings. This is something that we need to watch. A slow, controlled expansion can be good, but the solar sector is growing fast. First Solar needs to act and capture market share. There are plenty of other solar companies that are trying to get business. If First Solar cannot service its backlog, other solar companies may steal their clients. The other thing that I want to point out is their geographic concentration. First Solar is heavily focused on the American economy, with 84% of 2022 net sales coming from it. Most of their booking opportunities also come from North America. Any slowdowns there can have a big effect on First Solar and their stock price. Obviously, a focus on America can also be a plus. First Solar has a competitive advantage in the US because they are an American company. They also massively benefit from the Inflation Reduction Act. First Solar expect to receive between $660 to $710 million worth of tax credits. Not to mention that First Solar have great products for their target market in the US. Their solar panels are more resilient to bad weather, which makes them perfect for utility-scale solar projects. They generate energy more consistently too. Even though the total efficiency is a bit lower, they have a longer lifespan. And, of course, First Solar continue researching and developing new, better models. What I am trying to say is that First Solar has a lot of potential. I like the company, I like their massive cash position, I like the fact they have a tiny long-term debt. However, they really need to focus on expanding their production and keeping costs low. First Solar needs to show that they can ramp up production, revenue and earnings. Until then, I'm not sure I want to buy the company, especially at the current price of close to $182. The company is great, but the current valuation is too high for me. First Solar had $4.1 billion in revenue in 2015, but only $2.6 billion last year. Even though the expectation this year is around $3.5 billion, this is still 20% below their 2015 revenue 8 years ago. Right now, it feels like the company only does well because of government incentives and subsidies. If they didn't get the tax credits from the Inflation Reduction Act, I doubt First Solar would be trading above $100. That's why I am personally staying out of First Solar right now. However, the company has a lot of potential and I will continue to track it and share my research with you. What do you think? Is First Solar a buy? Am I reading this completely wrong? If you enjoyed this research, please leave a like and share it around. Thanks for watching and I'll talk to you again in the next one.